Hey, what's up, good people? How you doing? Welcome to Stock Up with Larry Jones. Go ahead, follow the prompter. Not getting out to a lot of people, but this one is going to be very important. We know what time of the year this is. We got low floats, we got low volatility, we got low momentum. Why? Because we are wedged in between a lot of holidays. We had Thanksgiving. We got Christmas coming this month. And then a week after Christmas, we have the New Year's. What happens? People are going to start looking for tax loss harvesting, etc. Right? And then we try and we expect a Christmas rally. That did not come last year, remember? So it's not promised. So what I want to do is help you in this video or with this video to help you set up some long-term positions. This is very important because here's where the bulk of the money is made. Here's where the wealthy look, and this is how they look for their positioning. The hedge funds, etc. It's not just buying every dip. It's not just what's the next hot stock, but where to put a lot of money into the market and just relax. Okay, so let's look at some of the things that's going on now. At the time of shooting this, we could see that the S&P slides as investors tap brakes before Fed decision this week. Now, a lot of news, a lot of data comes through, and it just seems it's always moving up and down, up and down. But I always look for trends because you will find that some of these things are expected. So as we look, we got the, let's go pull that up. All right, so we got the S&P, the NASDAQ, and the Dow. They are all down. The Dow by more than any of them, all right? 0.61%. The NASDAQ is down by 105 points. And it gave up this morning, okay? But you can see how it's just been steady trending down, all right? Now, it may freak some people out. They were like, why does this always keep happening? Up, down, up, down, up, down. You really don't know what's coming next. Sometimes you actually do, because when you look and you see, I always write these things down. I've been tracking the last 24 FOMC meetings. And look at this, 2 days before Fed Open Market Committee FOMC meeting, that's what it stands for, the Federal Reserve is in its blackout period, during which officials refrain from making public comments about monetary policies. That's why they all came out on last week and the week before. They lined up and they literally said what they wanted to do to move the market, and some of them jockeying for positions to be the next Fed. Okay, doing that. All right, the communications blackout. So it's just where we're going to be range bound, pretty much, is what this is saying. All right, the quiet period for the Federal Reserve begins on the second Saturday before the meeting starts and ends the Thursday after the meeting. Okay, and so you're going to see that all of this is kind of orchestrated, right? And so you want to look for opportunities to buy and put big money in the lows. Now, we had something that happened that most institutions missed. A lot of us retailers, we got in during Liberate Us From Our Money Day or Liberation Day. And remember, I made the video saying or suggesting that we should stop complaining and look where the opportunity is. Well, we did that. We bought at the bottom of Liberation Day, and then we were greater for that. And you can look at any stock, any ETF, go back to Liberation Day. Remember, it was the 2nd of April, right? And that the big dip was like the 5th, I believe, of April. If you go back and put a chart on that, you will see that was opportunity. The other biggest opportunity to just shove money into the market in good stocks and forget about it was 2022, which was a bear market. Now, if you guys been with me for a while, you remember that the end of 2021, I said the market was frothy. And then January of 2022, I said I was selling everything, right? I sold just about everything. And I sold about 80% of everything I had and cashed out. Why? I did it then because I thought the market was frothy and it was going down. I took a lot of heat and then it wound up being the right call. Larry, did you know exactly what was going to happen? No, I just knew the market was frothy and it was due for a big pullback because we had one of the most bullish bull runs in 2021. Crypto was on fire and stock was on fire. This is important for you guys to know, okay? So now, let's look at a few things. I want you guys to go follow me with this, all right? Tom Lee, he's suggesting that the S&P 500 could experience another 20% correction. But that 20% correction, this is why we have to get the whole story, but he expects a recovery to follow, okay? A lot of people just cherry pick what they want to hear. They can say, hey, 20% pullback, that's it. And then everybody runs. But they didn't read this. But he expects a recovery to follow. All right. Now, here, I want you to listen really quick because I'm pulling up Tom Lee because he's been mostly right in the last 2 years. And they're going to talk about some of his predictions here. Let's give this a quick listen.
Keep in mind, this is the most stock market focused White House ever. They want low deficit, strong growth, lots of drilling, and Republican sweep. Stock markets have.
Before we look ahead, here's a short clip from last year. Watch now.
And with regard to animal spirits, keep in mind, this is the most stock market focused White House ever. They want low deficit, strong growth, lots of drilling, and Republican sweep. Stock markets have done generally pretty well. But when you look at the second term of a Republican president, as we highlight here, the first half tends to be better than the second half. And these are the individual years listed, 1957, 73, 85, and 2005. So again, the odds favor a stronger first half. The Fed is also dovish, and we're going to see this through a recovery in auto sales, durable goods, and housing demand. And I don't think it's going to matter how many cuts they do. In fact, I'd prefer if the Fed made fewer cuts next year. One cut would be ideal because we know they have to get to neutral, which is 2.5% to 3%. That's 6 to 8 cuts. I'd rather see fewer cuts in 2025 because then it's a longer cutting cycle.
Now, you heard that was in 2024 when he made those predictions, which he was right. It was a Republican sweep, and we see what happened with the stock market, right? And he said less cuts because the market can still do good even without the Fed cutting a lot, okay? Takes a little longer, but if the market knows that the Fed is not going to cut, then eventually it absorbs that news. Remember, the market is forward looking. And so Tom Lee has been right. So here's what I want you to do and consider. Anything I say is not a suggestion for you to buy, hold, or sell. So let's look at the S&P 500, right? So he's saying a 20% pullback. If you go year to date, when was this? April. Look at that. April 8th was the actual bottom here. You could see that. April 8th was the actual bottom when you could have bought. And then, of course, here again, April 21st. But remember, this was April 2nd, okay? Because April 1st wasn't the deal. And right after that, we had this big pullback all the way to the bottom. So from April 2nd, after he made that announcement, all the way to April 9th, you could have bought. Why? And you could have pretty much shoved all in, right? Because let's just go here. Had you just bought here, you would be up And remember, this is a whole indice. Look at that. You would have been up 32%. Now, that 32% represents with other stock that represents 50%. With some stock it represents 10%. But that's a point where you could have just went in, set it, and forgot it. All right? Now, let's look at this. I want you guys, this is really going to help you with your long-term investments. All right? So we got a line here, right? 7,000 is where I have the S&P 500. This is the SPX, which is the S&P 500. I got a mark here at 7,000. Remember, I said, hey, we could rally and go to 7,100. Okay, we could still go to 7,100. Let me put a line there. We still could go to 7,100 if we have a AKA Christmas rally. So that's where we could go, where the dotted line is. Okay, but let's just say we hit 7,000 on the S&P 500. If we hit 7,000 on the S&P 500 and we have a 20% pullback, you guys see that? 20% pullback, bam. Where does that put us? At 55.97. Now, here's what's more important than the 55.97. Why did Tom Lee say that? You can look at the technicals and see. This is why you got to study, even if you're not a charter or a technical analyst. You could see right here in the dotted line, we're talking about, let's see here. If we went from 7,100 down to here, there's your 20%. Guys, you see that? So he's expecting 7,100 and then he expects a 20% pullback. Why did he go with 20%? Look at the chart. Resistance, rejection, resistance, rejected, broke above resistance and now support, right? And then support and then boom, right back up. So we could see this is why he was saying that we could come back down to here. But you guys see what this dip is? This dip right here is what? This dip was Liberation Day. So he's handing you the playbook, if this plays out, that if you missed Liberation Day, that you could literally come back and get a part of this dip of Liberation Day. Now, if it goes beneath 20%, the truth be told, and let's say we went from 7,100, let's say down here, now we're looking at 25%. Look at that. Look at that. It actually went down by 30% during Liberation Day, right? Now, here's what I'm looking to do. I'm looking to put a lot of money in the market in long-term positions, ETFs, and, some blue chips. And I just want to forget it, set it and forget it. Why? Because all of the fear that was in 2022, okay, and that is right here, we should have been buying. If I engage the 200 EMA right now, boom. He's telling you that if we have that 20% pullback, which comes all the way down to here, that we are beneath the 200-day moving average. Let's look at the Qs, right? I know this is not normal, but this is healthy. 20% pullback leads us right back here. The same chart, look at that. Resistance, we broke above it, and boom, we're right here, right? And if we came beneath that and it fell more than 20%, then we're talking again about a 36% pullback. Here's where I would buy. I'm buying heavy. And then if we engage the 200 EMA, then we're talking about being beneath the 200 EMA, okay? 200 exponential moving average. Now, I know this one is a little different for those that don't understand charting. And so why am I talking about this? Because right now, big money is looking for long-term plays. Where do we situate ourselves and get ready for opportunity. And one of the things I'm going to tell you is that you got to have some cash. And I'm also going to tell you, I'm not putting big money into the market, into anything right now. So we're going to shift and start talking about some options again. And we're going to, I have a new tool that is up, and I'm going to Money Moves, and I'm going to have about 10 people try it out in beta. And by Christmas, we're going to have it up. I want you guys to check that out. If you really, really, really want to learn about options, why? Because if it does fall, we can make money while it's going down by doing puts. And then when it turns around and rebounds, we can make money by doing calls. That's why. So you learn a new tool and you never stop making money. Come join us at Money Moves. The link is below. Just click down at the bottom if you're on your cell phone. Use coupon code LEARN, LEARN, and get more off. You could buy now, pay later, and break it up into 4 or 5 small monthly payments, one-time payment, lifetime access. So that's what I wanted to show you. If this helped anyone, let me know, because I know I have a lot of new people here that say, Larry, I got 50K, I got 5K, I got 500, and I just want to start building long-term wealth via ETFs or via Mag 7 or via blue chip companies, and I just want a good entry. So what do? Before then, you could dollar cost average with very, very small amounts. This is just something for you to think about. I do. I'm still doing it with iBit as it pertains to crypto. And I'm looking right now. We got the Bitcoin just fell just now to 90,000 exactly now, 89,000, 90,000. We got Ethereum at 31. So I'm buying ETFs in small portions. I'm buying iBit and I'm buying XRP, right? I still have all of my crypto, but those I got in very, very small amounts, because in crypto winter, I'm going to go in heavy. And that's what we do. We buy fear and we sell greed. All right, good people, I'm going to leave it right there. Sorry for the baggy eyes, but man, it's been short nights and long days and long drives. But you know what? We're here. I'm thankful for you guys, and I want you to really rewind this and tell me, please, in this video, I need you to tell me that if the market pulls back by 20% in 2026, what are you looking to buy? In stocks, not crypto. In stocks, unless it's a stock. Unless it's a crypto stock. But tell me, leave me in the comments 1 to 5 positions that you are looking to just put money in and leave that alone for the next 10 years and continually add to it. Now, again, I would say I tell my loved ones, for every dollar that you put into your broker, and remember, your broker, you're making about 3.5% that they're paying you for just your money being, I can speak for Fidelity, for your money being in there, while your bank is paying you 0.01%. So just having cash in your portfolio, I'm talking about the legacy brokers, different ones pay different things. You are making more money and having that cash available. Every time you get paid, pay yourself. And right now, what I would do if I was just getting in the market, I wouldn't put more than 25% of everything that I'm putting into my broker actually to work in the market. As a matter of fact, I would be under 20%. So for every dollar you put in, only invest 20 cents. Why? You're cashing up and you're participating in the market just in case it does not pull back. Got it? All right. All right, good people, we're going to leave it right there. Make sure you check out the links below, and we'll see you later. Live, love, laugh, and learn.